What's cooking in SEC EMEA Finance? Here are some bites. We will cover OTC, P2P, supply chain finance, and tax.
Let's start with sales audit. First up, when possible, direct sales and returns, including DPP and gift cards, flowing through CAR and into S4 will be aggregated when posting into S4. Next, we are moving away from manual cash reconciliation. Instead, we will use CAR sales tender postings to match against EBS and Blackline. Cross-border returns will be handled operationally in stores as an unverified return with no reference to the original sale. Going forward, Nike store partners. Digital sales in store transactions will post as Nike Direct Digital Revenue instead of wholesale revenue. Liability, Arkansas, and discount postings for Nike Direct B2B and B2C digital gift card issuances will post systematically. Now something more personal, employee sales and discount reporting will be enabled in CAR.
Now, customer finance. Collections team will adopt global template for storing customer contacts in SAP. EMEA is upgrading to Nike.net Manage Invoices and Manage Claims 4.0. New fields tailored to EMEA, making things more relevant for the customers. EMEA is switching from Lockbox to S4 out-of-the-box EBS processing. No dummy account per country anymore. Users will identify and reprocess through Fiori. SAP DMC module, where financial documents are currently stored, and Nike Flow credit changes request flow will be sunset. Another important change, this time in how we will manage retro discounts. Retro discounts will be transformed. SAP S4. Condition contract will replace Excel. EMEA will no longer create credit memo requests for retro discounts credit notes. Instead, SAP S4 settlement document will be used. And now, let's cover a sensitive topic. Billing. Billing EMEA is complex due to various tax and legislation rules. To comply with these rules, SAP AFS is heavily customized. All existing capabilities will be rebuilt in S4, taking in consideration in-flight B2GE invoicing countries. Document types and billing forms will be harmonized, and new billing number ranges will be introduced.
What's shaking in Procure to Pay? We are streamlining P2P overhaul. Changes include updates to Coupa Indirect, duty invoicing, employee expenses, freight invoicing, GRIR and reporting, and payment processing. Let's start with OneSource. Interfaces will be built to leverage OneSource. For SEC, OneSource is not included in the design. How are we going to handle payment terms changes in Coupa? Governance process will be created to safeguard the payment terms in the POs to be aligned with VMD. Let's switch gear to duty invoicing. Duty invoicing process is a non-PO based process. This differs from global standards due to the bonded warehouse in Lockdoll. Therefore, duties are not recorded on POs, but are captured in the outbound flow. What about employee expense? There will be one inbound feed per country instead of currently. We will reduce the amount of manual checks and payment failures. Payments will be simplified in SAP S4 by using the Citibank vendor setup instead of employee as vendor setup. Lastly, currently Nike Flow is used to gather bank account details from employees. Future state, this data will be retrieved from HR. This means that the bank account used for salary payment will automatically be used for T&E reimbursements. Changes are also expected in freight invoicing process. Freight orders are currently booked on product POs, but in the to-be, this will change into a service PO. The freight settlement document will be used to process and book invoices from Nike Flow to S4. Another change for freight invoices is the way they will be booked in future. All requirements need to be in Nike Flow. Finally, goods received invoice receipt, reporting and payment processing. Adjustment will be made to the existing global Fiori tile to match EMEA requirements. For each EMEA entity, a payment remittance advice will be available in S4.
Supply chain finance is flying towards promising wins. Let's navigate the changes that will enable these wins. S4 will be key for some changes. For example, we will use standard S4 functionality for lowest PIR value per plant and material. S4 will also be used for standard cost calculation. The purchase price variance is cascaded to the channels via material ledger functionality. The freight PO will be separate from product PO. The freight cost allocation will be automated on material level upon product PO goods receipt. Standard duty rate will be set up for stores and regional DCs based on historical data by product engine and destination country. The goal is to get higher duty accrual accuracy, as this will serve as the actual for stores. Intercompany STO is used for inventory transferred to another company code or legal entity, and intracompany STO for inventory transfer within the same company code. Expected wins for supply chain finance. First, consistent FOB across all geos. Secondly, dynamic price release will be activated. Another improvement will be that actual COGS will split by cost component on GL account level. We're also expecting some reporting improvements. Cognos will separate COGS cost components between standard and PPV. Another win in the reporting space is that we will be able to estimate actual COGS with pickup points at mid-month. And finally, a big gain for digital sales via statistical goods receipt, avoiding inventory posting and posting directly to COGS.
Tax regulations are evolving quickly in EMEA, with the introduction of many B2G countries in the coming months and years. These conversions to B2G will largely disrupt processes across finance, obliging us to implement new solutions and rethink how we connect with the marketplace. We are committed to ensuring compliance with all relevant tax regulations. Our tax team is actively monitoring changes in legislation and providing guidance.
Challenges and opportunities lie ahead us. We move forward with renewed energy. Thank you and stay healthy.